Good morning, everybody. Sorry, started a couple minutes late today. Good morning, good morning. Alrighty. So let me just look at a couple things here on the spy. Just kind of want to map out some really important ranges here. Sorry, just one second, everybody, and then we can kind of get started. Alright, so Friday, obviously, we had massive selling even after the stream. Um, we dropped down all the way to the 735. Currently, the pre-market is at 743, almost 744. Now, the crucial levels that I kind of want to mark out here, which I actually think I'm just going to go ahead and delete these two gaps because those aren't super important. I want to mark the 20 mod today. Because potentially we might be just retesting that level. Now this will shift on open, so we will have to readjust it a little bit. But looking at the hourly, we should be seeing the 20 mod pull down a little bit today on the open. Which kind of gives us this room. Now, very likely that's going to pull down very slightly. And what I'm kind of marking in that box there is the upper bounds and the lower bounds of the 20 mod. Which that's kind of what I have the expectation of the market really trying to basically work on today. We do have a big chunk of liquidity right here, which I'm not going to keep this dragged across the screen the entire time, but that plays very well within the level we're expecting to test today. And with that, come on, where's my templates? And with that, this would make a bullish cup. Okay, if we're actually going to head upward and retest that level a little bit. Now, the thing that we're all kind of concerned about is that on the larger time frame, and we'll just go to the daily here, that this is starting to form somewhat of a head and shoulders. Okay, so even though it didn't pull down all the way to the 731, the fact that there's still the liquidity there, and that we can start to build out this right shoulder liquidity within this range. And continue heading downward if the market's going to, you know, take all the news as bad. Now, I know over the weekend, hostilities with the conflict kind of, reignited, so that's ongoing again. We see the oil prices fairly elevated again. They did jump up towards that 140 range for a brief period of time. So that's definitely going to play on the market. Um, Usually it's going to work, against the market, but I think with how heavy of a selling we saw on Friday, the market is really trying to find some reprieve here. So in terms of the day, I am kind of bullish based off of just purely this structure. It looks like they're aiming to close this cup here. Now, from this cup, this can lead to a pretty large rejection to the downside, whether it's through a handle, to build liquidity downward, or just based off of a pure rejection, because technically this can still turn into a head and shoulders. So it's going to be really important once we do have that pull downward to identify whether, this is just building a handle to the downside, or if we're actually trying to build more liquidity to drop further. So it's kind of the thesis for the day, is that very likely they're going to close this cup to the upside, retest that 20 mile range. From that 20 mile retest, either they can fully buy that range up and potentially head even further upward on the day. We have multiple gaps above us. And again, I'm not going to keep these showing the entire time. But we do have multiple major gaps above us where they did build liquidity. So if they want to kind of just forego this handle and continue buying upward, technically they have the ability to do so. So I'm just going to drag these gaps to the side, just so that we're aware of them. And I'm going to turn these purple to show that they are bearish structures. Sorry, I haven't been able to look at chat a whole lot. Good morning, everybody. So I want to look at precious metals because you were correct about that. Today could be a very, very nice day for precious metals. I want to look at gold main. So it definitely does look like they want to reclaim this 4,300, 4,380. Close that cup there. So there's a little bit of room on precious metals today. Now, the reason why I'm not looking too much further outward just yet is because with the conflict starting back up, that actually weighs against precious metals. So potentially, with the conflict going on, that can continue to pull gold and silver down even further. So ideally, I want to be able to take calls towards this 745.32. that's kind of what I'm looking for out of the first trade this morning. Now, they're not really giving us an entry just yet, but if the market pulls down pretty much any this morning, then I will be engaging on some of those 745 calls to the upside. Because I do think that they're going to aim to close this cup. Market opens in 3 minutes. Give me 1 second to turn off my heater so I don't melt my room. Good morning, everybody. I'll be back really quick. Alright, got my coffee ready to go. Now, if we can get our pull down, which would be super ideal. And hold on, let me get my phone out. Okay, so let's get some of these calls added to the watch list and also get some puts added. So the 735 calls, or excuse me, the 745 calls, um, let's get those added to the watch list. And then we will watch list some puts in just a couple minutes. Because I want to see the where the 20 mile is opening at. So the market opens in like 30 seconds now, so we are starting to get a little bit of a pull down here, which that's kind of exactly what we're looking for. We see the UVIX and UVIXY this morning pulling down pretty heavily. They're both down 4 or 5% right now, so okay, market opened. Let's check our 20 mile. It actually pulled upward slightly. It pulled upward by 30 cents. So it's at 746.47. Perfect. Let's get that adjusted. Okay, so we're starting to get our pull down here. So again, I want to start engaging on calls pretty soon here. I don't know if we'll get the pull down all the way to the lower Bollinger, but I'm willing to take a 20 mile entry and also a lower Bollinger, assuming we get that. Now I'm waiting currently. I want to see much further pull down before we really engage on the calls. And also want to add the 746 calls to the watch list as well. Because with the 20 mod being at that 746.46, that gives us quite a bit of upside here. No, I'm not taking any of the calls just yet. I'm going to be patient and wait for the pull down at least towards the 5-minute 20 mile, which is currently at the 743.53. So waiting for that to occur, but I do want to get the 746 calls added to the watch list as well. And based on the day, we should pull up to that basically the 20 mile range if we're going to be testing the level, which means that once we get up to that 40 or 746 range, we should be trying to target basically the 745, 744 puts. So let's go ahead and get those added to our watch lists. Okay, so we are starting to get our pull down here. But I am going to be very patient and wait for at least that 20 mo, because I'll just continue to add to my calls to the upside once we get to the lower Bollinger. So I'll take a very small entry at the 20 mo, and then I will take an additional entry at that lower Bollinger if we get to that level. So our 20 mo entry is coming up very soon here, about 20 more cents. Okay, so I'm going to go ahead and start adding the 745 calls. Okay. Okay, so I'm in those at 145 per. Now we'll see if we get down to the lower Bollinger. If we get down to the lower Bollinger, then again I will be adding a few more calls into that. Lower Bollinger is currently at the 742.46, so we're just about there. Alright, we're at that level. So I want to go ahead and tack on just a couple more calls. And these are the 745s. So I'm adding these at 118. Okay, so my average right now is at 124 on these 745 calls. Okay. Made entry right there. And made a small entry at that 20 mo. Okay, so now that we made our entries, I want to go ahead and take a look at the VVIX, which it has been pulling down quite a bit. The high from Friday was at 102.09. Currently we're at 97.47. Said it opened at the 96.75. Had a very slight pull down and then pulled upward. So we'll see if this continues to trend upward, because if that's going to continue trending upward, then that will be working against our positions, which obviously we don't want. And let's check the HIG today. The HIG is seeing some buying. The low was at the 79.54. The high was at the 79.65. Basically, I had that very small pull down in the open. Seeing a little bit of buying in here, but still a little too soon to say. Now, from our lower Bollinger entry here, again, we're looking for that 20 mo for the exit. And that'll be the first exit. So I want to set our market conditional orders to the 743 This is 743.40, but I actually want to set this to 743.51. I know that's a little above that level right now. But we will be targeting that for an exit. Now, with the 20 being there, we need to mark out our range on the upper bounds and lower bounds. Alright, so plenty of liquidity built. If we're going to have our 20 push to the upside, and again this is the daily 20, then it's all ready to go. We're in calls, the level is above us, and technically this is the closest support range, so very likely the market should be trying to grab for that today. And my calls are starting to become in the green. So again, on our first exit here, we're just going to be exiting, between 60 to 80% of the positions. And if there's room to run, which there really is a lot of room to run today, then we will allow the runners to run. But our first exit is going to be at that 743, basically 51. VVIX has not been moving a whole ton, still at the 97.55. So still very elevated. I just want to look at semiconductors here and everything. And I want to look at the HIG again. HIG's been seeing some buying, not a whole ton of buying, but it's seeing a little bit of buying, which is telling me that at least they're not trying to sell it. So even though we are pulling down a little further, I'm still expecting this to be a very nice upside today. Because I guess the potential would be, if we're not going to take the 20 upside, then we're going to try to drop to the lower Bollinger on the daily time frame, which that would be a whole, basically $12 downside. Do the conditions of today really merit that? Not so much. But it definitely can change. Okay, we could definitely see the VVIX continuing to spike and, start getting these signals that start showing, some real bearishness that would take us further downward. It's hard to say when the HIG's buying though, because usually when the HIG's buying, that means that we should be seeing that same type of buying within equities. So it's very likely this selling is going to start tapering in here. VVIX did pull up to the 97.91, pulled back down to the 97.80. So dealers are hedging a little bit, but so far not massive buying to the upside yet in terms of the volatility, which is telling me that very likely this selling that we're seeing right now can turn very quickly into buying to the upside. And I just want to keep a very close eye on the HIG. So far that's still buying. Her volatility is just kind of treading water currently. It's at the 97.73. So very elevated, but not really seeing the major buying from that so far. It's at 97.62 now, so it's continuing to pull down. And the HIG is continuing to buy upward, so both signals we want to see when engaging calls. Semi's still looking good. But if semi starts selling here, that will definitely pull the SPY down. So we are seeing a little bit of selling out of semiconductors. Volatility still at the 97.70. So I want to check the 1 minute time frame here just for a moment. Yeah, it's looking good so far. We should get our upside buying here. Volatility did pull upward very slightly though, so have to be concerned about it. At least have to, actively be watching it. It does feel like they're trying to grab a lot of liquidity for this 20 ma to the upside though, on the daily time frame. Alright, starting to get our buying a little bit. See the HIG still buying upward. So our first exit is starting to come up here a little bit. Now again, I'm looking for the 743.51 for a small exit on some of these calls, just to lock in some profit. Good morning, everybody. Am I still in the Uber contracts? Yes, I'm still in all those dated contracts. Not worrying about them too much right this moment, just because we did have that, market sell-off on Friday. Sorry, I haven't been able to see chat a whole lot. I'm currently in the 745 calls to the upside. I had a small entry at this 20-mile range on the 5-minute time frame, and a small entry at the lower Bollinger. Now volatility is picking up a little bit, so that again, this is very, very concerning. It's at 98.19. And the HIG is still buying. Someone just bought 2.5 million shares. It's a lot of HIG. Now, on the 1-minute time frame here, I know I got a lot going on my screen. I do apologize. But on the 1-minute time frame here, we do have this cup forming with the potential handle. So we'll be looking for that to, break us out or, continue to break us down. Now, again, everybody should have taken some profit once we hit that level that we were talking about hitting. I still have some of my calls going, but not all of them. Now, if we continue to see the volatility pick up on the day, then we are going to try to get positioned into some form of puts. Just this downside really doesn't look that great right now. We have a lot of bullish structure throughout semis, throughout the SPY and everything, which is very likely, these cups and handles forming. Now, when we get back up to the 20 mod today, I think that we need to get a put hedge going. So I want to look at the puts. I want to find something that's cheap that's going to work. So probably those 740s. So I'm just adding these to the watch list right now. No, I'm not taking them just yet. See if we get this cup breaking down here, because that would be very indicative of continued downside. Volatility still picking upward quite a bit. It's at 98.41, so super, super concerning. Basically, once we get back to the 20 mile, assuming we do, 20 mile being at the 743.33, then I want to take a few of these 740 puts just to hedge the downside, just in case, so that nothing funky is going on. And I want to look at the HIG again. HIG seeing a little bit of selling now. So if we can get up to this 20 mile again on the 5-minute time frame. That's at the 7:43:34. Then I am going to engage some puts to the downside, even with the calls that I have going, but just not going to risk just being purely in calls in a day where potentially we could be heading downward. And if we do get our upside, then these downside call hedges will be, you know, exactly that, just insurance to the downside. We do have some calls going still. Those calls were bought at a very good price. So that's what we'll do. We'll hedge the downside just in case. So we are starting to get towards this 20 mile range on the 5-minute time frame. And again, for this downside hedge, I only want the 740 puts, even if they're, you know, quite out of the money and everything. This is just going to be a hedge for the downside. So I'm trying to wait for that 743, basically for 35 range. Okay, so I'm going to go ahead and start taking a couple of these. So my entry is at the 97, 0.97 anyway. Okay, so now I got the downside hedged on the day. I have the upside, you know, prepared. And at this point, we wait. Either we're going to get our upside breakout, which, as you can see, let me go ahead and delete this big old cup because that's in the way today. But we have this cup and handle forming, and we talked about seeing that on semiconductors and SPY previously. So this is looking very good for that breakout. Now, basically what I want to do here is I want to head up towards the upper Bollinger. Once we get to the upper Bollinger range, I'm pretty much going to cut the majority of the calls. So the upper Bollinger's at that 745.70. So once we head up to that range, I'll cut a majority of the calls, and then we will work on some additional puts up here. Now these won't be the 740 puts. These will be very likely those 743 or 744, whatever we added to the watch list this morning. So the 744 puts on the watch list, but we might be targeting 743/742, so I actually want to start adding those to the watch list just in case. I like those 742s actually. So we're looking for either that breakout to the upside or for the market to really start pulling downward and start printing the 740 puts that we already have. Now volatility has been pulling down a little bit from the high of the day. It did pull up towards 98.47. It's currently at the 98.39, so pulling down very slightly. Now potentially this is going to start forming some sort of crazy head and shoulders here, but so far this potentially looks like a smaller cup and handle. So if we don't see a continued rejection to that downside, then our upside should be building very nicely. Now inversely, okay, and I want to go to the 5-minute time frame here. If we start breaking down again, because we did hedge at this 20 mile range, which I want to kind of mark that entry. Because we hedged at that 20 mile range, if we have a full breakdown on the day, which means basically pulling down, below that lower Bollinger again, we can work to profit on some of those puts, maybe reposition some of those calls. So that cup did invalidate, or the handle anyway. And potentially this is starting to turn into inverse cup to the downside. Okay, so good. Our put hedges are doing very good for us. Okay, now we have to look at the structure entirely different. This can be forming a head and shoulders. So our hedged puts should be absolutely killing it right now. Mine are up quite a bit. I entered at 0.97. They're currently at 188-ish, give or take. So looking towards this breakdown here, I want to target basically the bottom of this, or the top of this box. Now, when we get to this level, we will be cutting the puts and calls that we have and kind of repositioning the calls that we have, because the current calls are the 745s, which at this point they're hedged to the upside. Volatility is still picking upward, so it's at 99.13. Remember the low was 96.53, so it's up almost a whole $3 today, which that's not a good signal. So we had our first trade go very well. Second trade was mainly, excuse me, I'm losing my voice again, I need to take my medicine in a second, was taking those puts at the 20-month. And now we're really looking for that major downside. So I'm basically looking for the 740, 20-ish range to really exit those puts on. These puts are up over 100% right now, so they're absolutely kicking butt. But essentially, I'm looking for the bottom of this cup, this large inverse cup to fill here. Which again, that should be a lot closer to that 740, 20-ish range. But from that cup closing, we will then look for bullish structure. Now we're not going to be like ravenously entering calls into this today because we are seeing this breakdown, but we will be looking for a little bit of upside to continue pushing further downward today. So once we hit the bottom of that gap, which is at the 740.36, volatility still at 99.06. Yep, everybody should have been able to have had some of the call exits up here and get positioned into the puts. So hopefully everybody should be doing very well right now. Now, technically, with this being on the lower Bollinger on the 5-minute time frame, this can give you a entry into calls, but I'm not wanting to take additional calls into this structure. I want to see this structure fully closed off first, and then we can work on, um, you know, taking some call positions once we actually start seeing some support built at the bottom of the structure. Sorry, I'll work on typing out the positions a little better. It's just kind of hard for me with the current setup I have. I haven't had time to get um, my desktops set up, so I just have the laptop currently. And because of that, it makes it a little difficult to see the chat while trading at the same time. Not that I'm trying to ignore the chat. Volatility pulling up to 99.32. And I want to look at the HIG again because this should be reflective in that as well, showing selling, which kind of a deviation here. We have a little bit of buying out of HIG. So volatility picking up, but the HIG is still basically holding its level. Semiconductors have pulled down very heavily. So this cup and handle did reject. And with semis, what we have building here is a very nice potential head and shoulders. Or they can aim to just close this gap to the down excuse me, to the downside. Now the thing with semis here is that we still have bullish structure, even though we did get, some pretty heavy selling in there. So I do want to see if they will try to invalidate some of this buying structure. Because depending on that, we could have quite a lot of downside today. I mean, technically they could take out that entire level. So I'll pull that off to the side. But it is something I want us to kind of be aware of. And that would take us all the way down to the 736, 736.37. So quite a lot of downside in the session if we're going to continue seeing the selling that we're seeing. And we're starting to see this micro inverse cup starting to close here, which should bring us back down to that 740-60 range. Yeah, basically really looking at that 740.36. It's like right in there. Now, the thing we do have to be careful about is that, again, and we talked about this morning, that we do have a lot of liquidity formed here. Okay. This is still, I can't draw very well today. This is still a bullish cup. Okay. So with this being a bullish cup, potentially they could be forming the handle to the upside. Which is why we're still holding both puts and calls. A lot of mixed signals on the day, so we want to be holding positions in both ways. Volatility did pull down very slightly. It's at the 98.86. And let's see if our HIG is still buying upward. Nope, HIG has sold a few cents off since that level. And while we are looking for that downside again, even with semiconductors here, we do have bullish structure built. This could be the top of that cup, forming the handle to the downside to build liquidity to continue heading upward. Not so sure about that though. On the OBV/ADL, we are seeing a little bit of a spike, but nothing too remarkable just yet. But our volatility is starting to pull down quite a bit. It's at 98.71. Was all the way at the 99, I think 30 something. Still seeing volatility pull down very slightly. Potentially can be forming some bullish structure here on the 1 minute time frame. I'm going to drag this off to the side. think my internet cut out on me, but I'm not sure. Okay, it's loading again. So 741, 99, 742. So if we see a rejection here on the 1 minute time frame, that would be very bearish. That would take us down, basically back down to the lower Bollinger on the 5 minute time frame. Now our volatility has been pulling down slightly, so it's still at the 98.69. And we are continuing to see a little bit of selling within the HIG as well. We'll look at QQQ here. Nothing too remarkable just yet. So I am expecting the volatility to pick up in a couple minutes here, just based off of some of the structure I'm seeing. And I want to look at semis as well. To me, this looks very, very much so like an inverse cup. And because of that, this could be that handle to the upside before continuing to push downward. Just have to kind of really watch that. Volatility starting to pick back up again, so we talked about that. Mentioned that I believe we'd see this pick up again. It's currently back up at the 98, 92. But then it decided to drop back down again, so it's at the 98.78 again. Indecisive dealers. Okay, let's see where the HIG is. HIG is still currently selling off a little bit. It's at the 79.56. I want to see if this turns into buying or selling. I apologize that the stream's cutting out for some reason. I don't know why my internet is not being very good right now. This looks very, very close to breaking down pretty much any moment here. Again, I really am looking at that 740.39 to be hit fairly soon. Volatility is starting to pick up a little bit, so at the 98.86. Alright, starting to get our push down, so if we can get our 740.39, I will take profit on a majority of the puts. I'll keep some going just in case we continue breaking down. But that'll be, pretty much the range that I'm looking to take a lot of profit on. Now, everybody should be doing pretty good so far. We had the first calls, which we did get an exit on. I still have a few of those calls, but at this point they're pretty much insurance for the puts. We were able to take some puts at that 5-minute 20-mile range, and from those they're currently, absolutely blasting off, and they should give us, quite a bit of profit. For me, my puts are up basically 100% right now. When we get to our level, that'll be probably closer to 140. Now, I won't be exiting the calls once we get down to this level, because again, they're kind of insurance on the day, but also if we get this upward handle, then that would give us, a better call exit on some of those calls. So, kind of waiting for that. Now, volatility is starting to pull down quite heavily here for some reason. So 98.46, it was all the way to the 99 just a few seconds ago. Do have a small inverse cup closed here. So it could be the handle to push us back down. Again, I'm really looking for that 740.39 to exit these puts. Yeah, when you have your puts so far out of the money, it takes a really large move for them to pretty much gain anything. I think you have the 720 puts, so that could even work against you where the theta could be eating that contract, even if we're pushing downward towards the strike. But because the strike is just so far out of the money, um, nobody's pricing it in as the actual delta move to the downside. Um, so you do have to be careful with that buying super far out of the money like that. Now I want to see the volatility again. It is at 98.16. Wow, that's pulled down quite a bit. Interesting. So either we're going to be seeing some very aggressive buying here, or dealers are just not hedging a whole ton to the downside. But it's looking like we might get our aggressive buying here. Volatility is just absolutely dropping right now. It's at 97.64. Again, this was literally at 99 just a few seconds ago. I want to see what's going on with the HIG. The HIG is still selling though. So we're starting to get some conflicting signals on the day. So yeah, either we're going to see the volatility start picking back upward very aggressively, or we're going to be seeing the market basically going on a tear to the upside, just based off of what's going on with volatility here. I'll change that to purple. So volatility still pulling down, 97.31. Kind of a very strange signal to see when there's a lot of bear structure and we're expecting downside. Um, that's kind of telling us the opposite. That's telling us that dealers are exiting their downside positions. HIG is still selling though. Well, I'm prepared for whatever comes, I guess. Dealers are deciding to kind of throw us for a loop here. Volatility's still pulling down. It's at the 96, 92 now. So in fact, I'm going to tack on a couple more of the 745 calls. They are very cheap. So between those earlier calls and what I got now, my average is at 0.96. And still holding the puts. Not really convinced in this upside, it's just our volatility is just getting absolutely demolished right now, which is, that's very indicative of upside buying. Yeah, I mean, volatility is just absolutely dropping like a rock right now. It's at 96.44. There's the invalidation of smaller bearish structure coming up soon. So if we do hit the 742.53, that will invalidate that bearish cup. But if we get a rejection here, then that's going to keep that inverse cup and handle going. So kind of weird signals going on. The HIG is still at 79.55. There you go, there's that upside. Interesting day so far. Volatility still dropping like a rock. So at that point, this kind of allows this cup up to the 743.73 range to be filled. Volatility is still dropping, still at the 96.11. Ticked upward just very slightly, 96.13. So we should be seeing this cup close to the upside. And that top of that cup is at the 743.73. Now, again, on the 20 MA or on the 5-minute time frame, technically there's a decent call exit here. If we're not going to get our upside fully, which it's hard to say that we're not going to based off of the volatility. The volatility pulled down all the way to the 96.14, but it's kind of just sitting there. Meaning that this potentially could be a really, really solid put entry if we're going to continue breaking down on the day. Which I actually do think I want to add to my puts here a little bit. Basically added to some of the calls right there. I'm not going to exit these calls at this range, even though there's, profit to be had with them currently. But I think I want to enter a few more of these 740 puts here. So I'm going to do that. So 105. Alright, so my current average on the puts is at 101. But I think potentially this could be breaking us down further here. Starting to see our volatility picking up very slightly again, so it's at the 96.29. So if this is going to turn to that selling range, then we will be seeing volatility picking up pretty aggressively again. Kind of the range on the day is that either we're going to have this massive breakdown or we're going to reclaim the daily 20 MA. Which is why I'm kind of fine having a whole bunch of contracts in this range. Because, again, either we're going to be having that massive breakdown or we're going to be having that massive breakout. So, between some of the entries we took, I'm okay with holding some of these. Because one of these sides should print pretty hard. Just basically have to break this range to either the upside or the downside. And we have, structure for both sides. We do have bearish structure built, but we have potential bullish structure starting to build in here. So if we don't see our volatility pick up, then this can be, once again, those larger cup handles that we talked about. Semis kind of show that a lot better. Now, technically, semis still can break down here and give us bearish structure, but this is starting to look, fairly bullish. This is starting to look like that this is trying to form a cup to the upside here, which on the 5-minute time frame, that'd be that handle on that cup that we talked about. So we need to look for that. This does have to pull up to the 572 to really validate that cup and invalidate some of the previous bearish structure. Volatility at 96.10, so still pulling down. That could be the smaller cup with the handle forming. So pretty crucial range. Either we're going to have that massive breakdown or head up to the upside here. Just kind of waiting for a little more signals to really kick us in the direction it wants to. The Hig is seeing a little bit of buying, but not really. Still at that 79.56. Which that's kind of the part that's telling me that the upside isn't really ready for the buying. Now that can shift very quickly, but the VVIX pulling downward is telling us, you know, almost verbatim that dealers are exiting the downside hedges, which means that we should be expecting the upside. So, mixed signal day. That's why I'm very okay with having both the calls to the upside and the puts prepared. Because we're not going to set this level all day. We will break from this level either having, you know, that roughly $4 upside or, you know, potentially like $6 downside. Haven't checked the GEX this morning. I'll do that in a little bit here. The big signal really on the day is that if the VVIX continues to pull downward, then that's just telling us that dealers aren't hedging the downside. If dealers aren't hedging the downside, then, you know, what does that mean? That means we're going to be heading up to the upside. So, if it stays in this narrow range, will we make basically lose money? We technically would, but I'm not expecting it to stay in this narrow range. And the main reason why is that on the daily time frame, I'm gonna hide the drawings for a moment. All of our support is above us currently. And what I mean by support is the 5-day moving average, 10-day moving average, and the 20-day moving average. All of our short-term supports are all above where the market price is currently. So usually the moving averages kind of work like a magnet. You know, you'll kind of pull to that level. With us being underneath the 20 mod today, that gave us, you know, a lot of reasons to pull up to the upside, and that's why we originally did have that upside bias on the day, is that there's a lot of reasons to head upward. However, we started seeing the volatility picking up really aggressively, which shifted that a little bit. Now, we're not broken out of this range yet. We still have, you know, basically a whole $3 roughly of upside to go before we do break out of this range. But so far, volatility is telling us that, you know, it is continuing to head downward. That's telling us that dealers very likely are trying to push to the upside today. So our calls should do very well. Um, our puts at this point become the insurance position. So if we can continue to see this breakout to the upside, which I want to hide the drawings and everything. Do have this cup closing here. So looking for that cup to close, and then essentially looking for, that 20 mile range. But we're not entirely broken out of this bear structure yet. Again, we do have this inverse cup formed here. This can be a handle on that inverse cup. Now for semis, we see a much different story. We see how we have the cup and handle, very likely trying to break us out into high sub. You know, I won't say we're going to go all the way back up to that 590 range just yet, but very likely we're going to be heading upward quite a bit. On the daily time frame, the 20 MA, let's see where all of our support is. So that could be a 20 MA rejection to the upside. If that's the case, then we should be taking this 578 for the 10 MA. So semis at least have another $5 of upside to go. So we'll see if we have this SPY here, and I want to delete some of these drawings just so that but basically what we're looking for is this push back up to the 744.71. That would form a cup, which would be the handle of an even larger cup. Yeah, I'm looking at the 5-minute 20 mile here, but on the daily time frame, I'm looking for that the daily 20 mile to be taken, which is currently at the 746.58. So that's telling us that we basically have a whole $3 above us to be claimed. Volatility still pulling downward, so at 95.24 now. Smaller cup formed here, we can pull down, form a handle before heading upward. I don't really expect us to just chop in this range though for today. And really we're not seeing chop this morning at all. It might seem like it within the contracts, but these are still very pronounced moves. And we're just seeing the volatility drop like crazy, so that should lead into larger upside buying in the day. So I'm gonna check the gamma and everything in just a couple minutes here. So there's a put wall at the 740 and a call wall at the 745. Quite a lot of 750 calls have been written today, but a ton of the 737 puts have been written as well. There's a ton of the 744 puts written on the day. So it's kind of a mix in between on the gamma right now. For Uber, I don't want to average down on those positions. I just want to hold what we currently have. Again, the whole concept of those contracts are they're supposed to be very cheap and run very hard, or they kind of blow up. Um, so I don't want to continue adding to positions um, unless I see a really quality buying opportunity. I do like our Starbucks positions though, even though they are down quite a bit. Starbucks has been working to build a lot of bullish structure, even though it's been breaking down a few sessions. So we should be getting our upside here. Volatility is continuing to drop. It's at 95.20. The gamma's kind of neutral on both ends, so very likely a lot of that earlier put gamma was from that earlier price action. But we're seeing dealers pretty much saying that they're not hedging the downside at all right now. The HIG has not been buying though, which that is a concern for me. But this is looking very good for a breakout to the upside. And again, that upside from here would really be basically that 20 mile range. So that's what we're looking for. Right as I say that, it starts breaking out. Our 745 calls are starting to pick up a lot of weight. Now, you can have an exit at this 744.71. That would be the top of this cup here. But I'm going to be looking for the 20 mile on the day, which again is at the 746, basically 746.50 range, which is telling us we should basically be having a whole nother $2.30, 40 cents to the upside. So I really want to make these calls count. Right, me too. I'm tired of this. It's not really chop, but we're just gonna call it chop. Yes, we could have made some profit on those puts. I only sold two. Um, I had eight at the time, so, uh, you know, could have done a lot better on those. But the signals are very mixed today, and because of that, it's okay. But I'm up on my calls now quite a bit, so I'm happy about that. I'm gonna take like 2 or 3 minutes really quick to take my pneumonia medicine so that I can sit here and talk without my voice cutting out every couple seconds. So I'll be right back in just like 2 or 3 minutes. Alright, I'm back everybody, sorry about that. Okay, so 1 minute time frame here, I just want to see what's going on. Yeah, this looks very good for the upside breakout. Let's check the volatility. It's still dropping like a rock, it's at 95.13. But I would like to see the HIG buying upward. Um, Currently the HIG is dropping even further, so it's at 97, or excuse me, 79.54. Semis are telling us though that they definitely want to break out. Which, if semis are telling us that, then the SPY should be doing that as well. Yeah, we should be getting our upside push here. Volatility is still breaking down, so it's at 95.04. So we're kind of seeing a lot of good signals for the upside other than the HIG is not buying upward. Alright, so remember, there's a couple different exits here. You can target that 744.71. Okay, that is a very good exit, but I am looking for the 20 mile. Okay, so kind of look for this level at your own discretion, but I'm seeing a lot of signals that are telling us that we really should pull up towards that level. So that's kind of what I'm looking for. So I'll take a very light profit on my calls once we do hit that 744.71. but I will be looking to exit basically at that 746 range. So that's the plan. Now for the puts that we have, with this being a cup, we should expect a small handle to the downside. That's kind of when we're going to exit our puts. Basically at that 20 mile range. And from there, that'd be additional call entry. Very likely into that range that I'm looking forward to the upside. So that's kind of what I'm expecting to occur. So technically when we do get to the 744.71, that's actually going to be a quality put entry. I'll very lightly add to those 742 puts, and from that, write it down towards the 5-minute 20 mile. From the 5-minute 20 mile, we'll exit those puts and engage into more calls to the upside. So that's the action plan today. Now that we actually know which way the dealers are trying to trade this. So yeah, now we just wait. Just wait for our upside breakout, wait for the call exit, exit the majority of those calls at that 744.71, allow it to pull back, form that handle, sell the puts at the bottom of the handle, take more calls towards the top of the day. Sounds like a good plan, but knowing the stock market, things don't always work as planned, so we'll see how this goes. But it does look very good. Again, we're seeing volatility just absolutely get destroyed right now. And we're starting to see a little bit of buying out of the HIG, which that's very, very good. That's kind of the big signal I've been looking for all day. So if we can see continuation of this, then we should hit our level just fine. Find an exit. And be on our way. Now I'm going to check the gamma a little bit once we do hit the 744.71, because I do expect the put and call walls to kind of shift very, very dramatically at that point. Did okay on the calls, was in the bank when you bought puts. Friday was tough and I've been going red every day for 2 weeks, holding all long-term calls still. Yeah, you should still be holding those calls. We're seeing a lot of buying to the upside, and you know, those puts should really, really do well, even though we had that massive selling day on Friday. Um, kind of depends on when you took those calls. I mean, um, but I think they're probably dated outward. They probably have plenty of time, and depending the strike, they should be able to hit. So we're getting very close to our level here Okay, so I do want everybody to be paying attention for that. Again, we're looking for the 744.71 for the kind of the first primary exit on these calls. This is coinciding extremely well with where the 5-minute upper Bollinger's at. 5-minute upper Bollinger's at the 744.66. So that level should hit. Okay, just be very patient. Let that 71 hit. Okay, so we're gonna go ahead and start taking a little bit of profit on the calls here. And at this point, we're going to start adding a few of the 742 puts. Okay. 742 puts right now, very, very cheap. So I'm entering those at 0.61. So 0.61. And I'm still holding the 740s as well, okay? Because again, from this downside that we're expecting, we did close this cup. So we do expect bearish structure to build at the top of this cup. And we should be getting some downside from that. Okay, from that downside, we will take profit on these 742 puts and these 740 puts. Okay. So everybody should have taken a large chunk of the profit on those calls when we hit that upside. Keep a couple if you can, just in case we get the push all the way to the 20 mo. You know, you don't want to be completely cutting out your profit here. But basically using this cup top to exit a large majority of the call profit, get into a few of the 742 puts, and really be positioned for the rest of the day. You know, assuming we get a slight pull down, which fully expect here. I really do expect us to pull down basically to the 5-minute 20 mo, which is currently at the 742.70. And again, on our 5-minute time frame, this is our put entry. Okay, so it all aligns very well with what we're trying to accomplish here for the day. So those calls went super, super, super good. Very happy about those calls. Oh, it's gold. Yeah, that's gonna be a struggle because of the war. Um, I know a lot of new stuff with the conflict happened over the weekend. Um, I'm still optimistic about it. I still think that, you know, there will come a resolution sooner rather than later. Um, which would, you know, perform very well for our precious metals. Anyway, I'll be right back in just a minute. I want to go say bye to my daughter. Um, but this is kind of what we're looking for, everybody. You know, we took profit on a large majority of our calls up in this range, positioned into the puts. Now we're going to look for the downside. So I'll be right back. I'm back, everybody. Sorry about that. These are just 0 DT puts that I took. Again, I took the 742 puts at when we hit the top of this range. Want to check the volatility and everything now that I'm back. It is pretty much the low of the day, so 94.35. Semis pushed all the way to the 578.74, which means that they're just grabbing all of that liquidity. Cool, I think we did good. So the trades today, we took calls at the 20 ma and at the low. We were able to sell a majority of those, um, for profit at that point. Took some puts at that level while still holding some of those calls. We're able to pull down. I didn't sell all my puts at this level. I only sold 2 of them out of the 8 that I did have. So I could have done a lot better out of that, but I did use that as a small exit. And from some of that chop that we had earlier, I told us that we need to just get positioned into calls because we're seeing volatility just drop like a rock. So we took calls at that 741-ish range, basically all the way towards the high of the day so far. And from the high of the day, we're holding just a few of these calls, and now we're positioned back in puts, while still holding the 6 puts from earlier. I type them out. So yeah, that's what we're looking for currently. Either we're going to continue pushing upward towards this 20 ma, and these puts are going to get absolutely roasted, or we're going to get this cup forming this handle, and this handle to the downside will be when we can exit those puts, enter additional calls, and then continue pushing to the upside. But regardless, I am prepared for whatever comes. Once I have my desktop set up, which I still haven't pulled it out of the closet yet, it's been a process. But once I get the desktop set up, it'll make it a lot easier for me to type out all these entries and exits in chat while being able to read the chat and actively see what's going on with the market at the same time. But overall, everybody should be doing fairly well in their 0 DTs today. Yeah, I think the 748 on SPY is not out of the question at all. Because again, that's going to be where the top of the upper bounds of the 20 mile is. So now that we're trying to test this level, um, we should be anticipating basically the lower bounds all the way to the upper bounds. Currently we're at the lower bounds. We might see a slight rejection from this range. But when we have a moving average test, we should be basically expecting the test all the way from the upside, to the downside or downside to the upside, whichever way. Seeing a little bit of tapering in here. So we should get our pull down towards this 5-minute 20 mile range, which currently that's at the 742.91. And I want to look at volatility. Volatility has pulled down to the 94.35. It's currently at the 94.50. So seeing a very slight uptick in volatility. That uptick in volatility should coincide with, creating a handle to the downside on this cup formed here. And, at that point we'll take some profits on those puts, set up additional calls, and have a very good day. Now for the put exit, the 20 mile is currently at the 743.06. Let's go ahead and set our market conditional order to the 743.11. So I'll mark that in here. And we'll have to adjust this upward if we have continued upside chop. But regardless, those 742 puts should do really, really well. So how's everybody's trades gone so far today? Nothing wrong with staying out on the day, especially if it doesn't make a lot of sense to you. Not saying that's why, but I'm just saying there's some days where it's like, even as an experienced trader, the day won't make a lot of sense to me, so I'll usually try to um, take cheaper positions or just not trade that day. Today was pretty interesting though, because they started to form this inverse handle to the downside, or this inverse cup to the downside. Um, but we identified super early on that there was a ton of liquidity at this range, and that very likely they were going to try to reclaim that level. But it was kind of sketchy seeing volatility go from, I think, 96, 40 something all the way to like 99. And then it just absolutely dumped. So, um, our upside today should be very large. But we just need to finish building out some of this liquidity for that. The exit for the 740 puts are going to be at this, where I have the market conditional order level set to. We're going to be pretty much exiting all of our puts at that level. And from that level, we will also try to take on additional calls. So it's kind of what we're looking for at this point, is we're looking for a slight spike in volatility, which we're starting to see. It's at 94.55. And I want to see the HIG. The HIG is at 79.59. So we are starting to see a little bit of buying within the HIG, which overall is a bullish signal. So the day is definitely bullish at this point. We just need to be able to take on an additional call entry for that really big push to the upside. Yeah, I still have some of my calls as well, and I'm pretty much going to be writing those all the way down throughout this handle, um, and just adding to those calls once we get to that level, because I really do expect us to hit, that 746 plus. Starting to get our downside a little bit here. Sorry, I keep having to randomly go mute. I'm still dealing with this pneumonia, even though it's like mostly better. I just still have it in my lungs a little bit, so it's like I'll feel fine, I'll feel like I'm talking fine, and then all of a sudden my voice just like cuts out. So it's annoying to deal with more than anything. Give us our exit so that we can enter more calls. I want to change this to 743.17. Okay, and that's the market conditional order, so make sure you set that on your Webull. The 742 puts are starting to gain some weight. Again, my entry on them were at 0.61 per. I think Pat got lucky and was able to buy them at like 50 cents per, or the $50 per, but those puts are starting to do some work. Once we get to our level, they should very, very easily be close to 100%. Just give us our full downside. Volatility is starting to rise a little bit, so it's at 94.71. I think we're going to have to be fairly quick with our put exit here today when the level does happen. Might just be a gut feeling, but it doesn't feel like they're going to try to hold this level very long at all. So I actually want to move our market orders up to let's do the 27. So make sure you change that in your brokerages as well. So targeting that 743.27 for that put exit and for when we tack on additional calls. Looking at the 1 minute time frame here, just see if there's any, bullish structures that I'm missing or something. Potentially we had this small cup forming, but it did not complete the cup towards the upside, so that could be turning into, some of that sustained downward chop. Now our 20 MA is pulling up pretty aggressively here, so we're gonna have to change our orders again. So let's set it to the 33. So the 743.33 is when I'm looking to exit those puts, get in the calls, and look for the continued upside within this session. I really don't think they're gonna hold this 20 mile level for very long once they do push for it. I could be mistaken, but it just feels like today that they're not going to. Starting to get our downside. Again, we're looking for that 743.33. Even if we get a little lower than that, I'm not too concerned. I just want to ensure that we exit our puts at that level. Volatility at the 94.77. So slightly ticking upward, which does support us hitting our level. Just waiting for our exit here. And once we do get the exit, I will be looking at the 746 calls. I will probably very lightly add to my 745s as well, but those 746 calls should very likely pull to in the money. Okay, we're getting close to our exit here. Alright, and my puts have been taken. Now with those puts being sold, I am entering into some of these 745 calls and 746 calls. So I want to mark this out. Got our exit. And now we look for our upside. So that trade should have worked out very, very well for everybody. Okay, make sure you get exited out of those puts. Now for the next trade, we're again looking for the upside at this level. Okay, the upside on today is very, 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 very large. We have all the liquidity built for an upside breakout, so we're going to try to really capitalize on that. We're seeing the upper Bollinger expand pretty heavily too. The upper, hold on, give me 1 second. I can't breathe. Sorry about that. Anyway, our upside is very large today. We have all the liquidity, um, to facilitate this upside. We have the upper Bollinger expanding to the upside, which it's currently at the 745.94. That's coinciding extremely well with where that 20 mile is sitting at. 20 miles is sitting at, again, that 746.50. So, I really like the calls from here. I think these calls are going to absolutely blast off. And we're seeing a lot of signals that are heavily supportive of that. We're seeing our volatility starting to pull downward. Yes, it pulled up towards the 95.27. It was at the 94.35, but very likely this is that handle to the upside prior to continuing downward. And we're starting to see the HIG buy up as well. Doesn't look super strong, but it is starting to form a little bit of bullish structure in here. So yeah, that's what I'm waiting for next. Yeah, if you're able to hold those puts for that level, excuse me, then that's super good. But for me, I'm willing to just be prepared for the call upside. Today has been a very, very profitable day so far. Yeah, you're very welcome, John. Anything we could do to add some wins and recoup some of those gold losses and whatnot. Now, volatility did pull up to the 95.30. It is back down the excuse me, to the 95.27. So potentially we could be seeing that tapering that I'm looking for. Um, we basically do want to see this pull back towards that 94 range, though. Potentially even the 93 to really tell us that the market's going to be buying upward. Starting to see a little bit of support built at this range. A little too soon to say whether that's fully going to take off yet or not, but starting to see some of that support building. Now, if we see the VVIX starting to pull downward as well, then I will add a couple extra calls in here. But I do want to see the volatility pulling down prior to that. Just being very patient at this range. Again, I have exited pretty much every single one of my puts, and I am positioned into 745 and 746 calls to the upside. If we start seeing the volatility pulling downward and start really building support at this range, then I'll probably add a few more calls just because that would be indicative of, you know, that handle on that cup and, leading into the breakout. Now, if we continue seeing upside, I am expecting volatility to leg down here pretty soon. A little bit happened, so 95.19. But we do want to see this pulled below the 94 for the volatility. Um, but we're starting to see signals of support being built within here. So I'm very lightly going to add to my 745 and 746 calls. Because likely this is going to lead to that upward breakout that we're, fully anticipating. So starting to really see some major buying in here. The calls are starting to do good again. And volatility is back at the 94, 98. So exactly what I was looking for. And now we just kind of look for all-time highs on the day. Not the easiest trading session, but not the hardest either. Um, Very structured trading day. I think we did very well. The only thing I could have improved on today was this original put exit. Instead of exiting just the 2 positions, I should have exited probably 6 positions while keeping 2 of those going. Um, that would have made me a little bit more money today, but everything else has been going absolutely killer, so. Yep, and we should be seeing our breakout into the high of the day. And I want to check the gamma really quick again, because we did talk about how that might be shifted. And it has. It's actually greatly shifted to the upside. Now the call and put walls are still kind of in the same spots, but I don't really care about that. What I do care about is that there is a ton of 750 calls being written, both for today and tomorrow, which is telling me very likely that that's where the market's attempting to go. Which would be great for us because we are holding calls and hopefully everyone was able to exit their puts at the exit we talked about. You're very welcome, Tommel. How do you know they are being written? So with the gamma, we have a in-house gamma and delta tool, which I'll link in the chat. Just give me 1 second. That should work. Um, what this shows is where the gamma is being placed at. So earlier today, there was a pretty large shift in the gamma between, well, I don't want to say shift, there was a pretty, neutral range on the calls being taken and the puts being taken. Well, once we started to see this buying kicking in, reloading the gammas showing us that no, actually the calls are heavily, heavily, heavily being written right now. Especially at that 750 strike. There's just a boatload of calls being written. But that's what the gamma or the gex will be showing you. Basically, it's showing us currently that there's more calls being written than puts. If there's more calls being written than puts, then that's where a lot of that interest is lying within that upside. No, so you have to remember from the dealer perspective that if I'm a dealer, right, and I have to sell calls to the upside, um, meaning I have to sell positions that might be in the money, they might be out of the money, they might be, at the money. But let's say I'm a dealer right now and we're expecting the 744 range to be hit, right? Well, every call I sell that I'm expecting to have exercised, what do I have to do to offset that? I have to buy 100 shares. So I would have my original 100 shares, sell the CC, instantly buy 100 shares to cover that CC, knowing that very likely those shares are going to be exercised, meaning that I'm going to take the premium on the call um, and the profit from the exercised shares, and I'm offsetting that by buying those 100 shares as well. So what does that do from a market standpoint? That means that dealers are having to buy shares to hedge the calls being sold, which drives buying to the upside. That's how you get that algorithmic buying to the upside, is that to hedge those CCs being sold, they have to buy shares in lieu of that. They have to write the calls. That's the thing. Um, as a dealer, they're obligated to. They have that obligation to provide liquidity to the market. So even if they may not want to, um, they still have to do so. That's their role as a dealer. If there's a lot of interest in the 744 range, then they're going to have to basically take that range out. It's harder for us as retail because it's not like we can go out and buy 100 shares of the SPY every time we want to go have an exercise or have a contract exercised, right? Um, so it works a little differently for us, but when, you're a dealer with, you know, billions and billions and billions of dollars set up in these contracts to be able to provide liquidity, then it's not an issue. You sell a call that's going to basically run at the money or in the money, you pocket that premium, and you buy the shares. The shares will get exercised at that, say, 744 strike call. Um, but you've already pocketed the premium. You've already bought shares at a cheaper price, so you're good to go. You're going to pocket that small bit of spread. There's a little bit of liquidity for this Head and Shoulders that you're talking about, but I'm starting to see this right shoulder kind of, you know, be blown off. Basically, like, because there's that chunk of liquidity in there. I would have looked for this to have had a rejection in there if this was going to be that larger Head and Shoulders. But what I also see is that this was a cup that was formed. And because that was a cup that was formed, we needed some bearish structure at the top. Got that bearish structure at the top, pulled down, and now we're starting to close this cup, which is telling us that there's a lot of bullishness within the structures here currently. And we're seeing our volatility absolutely get destroyed again too. So it's at 94.52. So that's exactly what we're looking for our call upside. So we should have nailed this. Not too worried about this position. Yeah, as a dealer, you can sell into the direction that the market's going. Um, I know for retail, it's kind of like we'll do like CC sales to be more in a bearish stance, but for the dealer, that doesn't matter. They could sell CCs and just ride through that level because they're going to be buying shares on the other end of that trade. Um, which, kind of just creates that self-fulfilling prophecy of they're going to drive towards that level. Same works for the downside. If they're selling puts, then, they can also just continue to buy out the shares and allow those to get exercised. A little easier to do on the call selling side though. So that's why you can see these, massive institutions just selling calls for $100 of upside within SPY without an issue. Yeah, the rest of the day should be a pretty easy day. Um, I'm just fully expecting this push to the 20 mile at this point. And that's the daily 20 mile, which is at that 746.50 range. I don't really see too much else interfering unless there's, something with the news or whatnot, but um, our volatility is telling us that they want upside quite a bit today. The HIG hasn't been buying as much as I expected to, but it tapering just kind of sitting at that same range is actually, a signal within itself. It just means that they're not selling the positions, which that's, good thing for us. Now, I'm not going to be streaming too much longer today because I do think that very likely we're going to get our breakout. I'm not seeing really any signals telling us otherwise. Um, so if there's any questions that anybody wants to go over, now is a very, very good time. And just a reminder, this week I am starting the classes up again. So on Tuesday and Wednesday evenings at 8 p.m. Eastern Standard Time, those classes will be running. Now, not to self-promote or anything, but that will be covered in the $29.99 a month subscription. But if you're wanting to, you know, learn some new skills and whatnot, that's a great place to start. We will be starting those classes basically at the most beginner level, basically assuming that you know almost nothing about the stock market and moving over the next, probably 4 months into more advanced, um, mechanics between understanding technicals to setting up trades, all different types of stuff. So volatility is still dropping on the day, which is telling us, exactly what we need to see is that volatility is going to be dropping and we're very likely going to be buying towards the upside. What's the exit number for the 746 calls? I really want to see that 20 mile hit on the daily time frame. So for me, that's going to be a large exit around that 746.50. Now, we do have the upper bounds of the 20 mile and the lower bounds of the 20 mile to contend with. However, we're already starting to work on the lower bounds of the 20 mile. If we can get to our 20 mile level, then we should be fully anticipating the upper bounds of the 20 mile to be worked on as well, which would take us all the way to the 748.50 range. So multiple different exits in here. But if you want to be super safe, just use the upper Bollinger as that exit range. But for me, I'm going to be trying to target the daily 20 mil. How do I know if this trade is invalidated? That's a very great question. So, what we'd be looking for is that we exited the puts and took calls at this level. Okay. What needs to happen to invalidate this trade? Well, we would need to see basically this inverse cup close to the downside. Now that inverse cup would be closer to that 740 range, well, 740-90 range, which is, you know, not entirely out of the question of the day, but for me, that's very far away. For us to get back to that range, we had to see volatility pick up towards the 99 level. It's currently at 94.60. So for me, that's telling us that very likely we're not going to be heading downward too much further. If we start seeing our volatility picking upward and we start seeing the invalidation of this cup right here, so basically pulling below this level, then that would say, okay, all these calls are invalidated, we're heading downward. Until that occurs, we have plenty of bullish structure built in here. We have this cup, we have a handle forming, and from that handle forming, it's looking very likely that we're going to get our upside. That's what I'd be looking for to really invalidate this trade. Not really worried about chop or anything in here. Again, unless the dealers tell us specifically that they're planning to really start selling, which they will tell us. You know, we would see the VVIX picking up very aggressively. That'd be that signal that dealers are saying, okay, yeah, we want to head to the downside. Until that occurs, I'm not really expecting that major push to the downside. If anything, these downside pushes are just kind of more call opportunities. Yeah, you're very welcome. Alright everyone, if there's not any other final questions, then I'm going to be ending today's stream. Thank you all so much for watching. As always, I always appreciate everyone taking the time to come trade with me. Hopefully most of you were able to have a successful day. If you weren't, you know, we could always talk about it sometime, but take a picture of this if you didn't have a good day today. And go over what we were looking for within each of these trades, um, between being at the lower Bollinger to the 20 mile. So yeah, thank you everyone. Thank you. And thank you for all the support and whatnot. I always appreciate it. Um, I will be streaming tomorrow morning again at 9:15 a.m. So I look forward to seeing you all there. Other than that, if you need anything, go ahead and tag me in the Discord chat and I'll try to be around, but I do have to take care of my daughter fairly soon here. So I can't promise I'll be able to respond immediately today. But so far, what I really do expect out of the rest of the day is I really do expect buying to the upside. Um, I'm not really seeing signals telling us that we're planning on having a sell-off. We've been seeing, where's the HIG? We've been seeing the HIG holding strong all day long, which is, very ideal. We've been seeing our volatility just absolutely dumping throughout the day. I mean, it was all the way up at the 99.32 at one point today, and currently it's at 94.79. So, slight uptick in volatility at this range, but nothing too, indicative of major selling from dealers right now. So, potentially this head and shoulders that was brought up earlier in chat can be starting to build, but I'm not really expecting that. Now, if we do see volatility picking upward, if we do see the HIG starting to sell off, then that would, obviously change that very, very quickly. But so far, we're not really seeing those signals. Um, and because we're not seeing those signals, that's telling me that the dealers are very likely going to be pushing the upside very soon here. So yeah, have a great day, everybody. I will talk to you in tomorrow's stream. Take care and have